$38 trillion. That is America's national debt as of December 2025. Not a projection, not an estimate. The actual number sitting on the balance sheet of the United States Treasury. And while that figure might feel abstract, while it might seem like something distant that only concerns economists and politicians, I need you to understand something. That number is connected directly to your savings account, your retirement fund, your mortgage, your salary, everything you think of as financial security. Because while most people were distracted by politics and social media and the daily noise, the largest financial institutions in the world began doing something they have not done in 75 years. They started moving money. Enormous amounts of money. Quietly. Systematically. Out of dollar-denominated assets and into other jurisdictions. This is not conspiracy theory. This is documented capital flow. Public filings. Treasury data. Numbers you can verify yourself. And here's what makes this terrifying. This has happened before, not once, not twice. 3 times in the last 500 years. And every single time, it followed the exact same pattern, same stages, same warning signs, same devastating outcome. We are watching that pattern unfold again right now. The only question is whether you will see it coming, or whether you will be asking, like millions before you, how you missed all the signs when they were right in front of your face. What I am about to show you is not opinion. It is not political commentary. It is historical pattern recognition backed by 5 centuries of economic data. By the end of this, you will understand exactly what is happening, why it is happening, and most importantly, what comes next. Global debt has reached $315 trillion according to the most recent data. That represents 235% of global GDP, the highest ratio in recorded peacetime history. The United States alone added $2.3 trillion to its national debt in the 11 months from January to December 2025. But here's what almost no one is telling you. This exact scenario has played out before. 3 times in modern history. And every single time within 36 months of the smart money beginning to leave, the reserve currency collapsed. Not similar collapses. Identical patterns, same sequence of events, same timeline, same result. The pattern is mathematical. It is predictable. And once it reaches a certain threshold, it becomes unstoppable. Let me show you how it works. Every major economic collapse in the last 5 centuries has followed a precise 4-stage cycle. Understanding this cycle is not just academic. It is the difference between protecting your wealth and watching it evaporate. Stage 1 is Ascension. A nation becomes the center of global finance. Capital floods in from every corner of the world. Their currency becomes the standard for international trade. Banks expand. Markets boom. Innovation accelerates. The future looks limitless. Confidence is absolute. Foreign investors pour money into the country because it appears to be the safest, most profitable place on earth. This stage typically lasts 50 to 80 years. It is the golden age, and everyone believes it will last forever. Stage 2 is overextension. Success breeds arrogance. The government begins spending beyond its means, far beyond. Military expansion, foreign interventions, domestic programs, all funded with borrowed money. Debt grows faster than the economy. But no one worries because asset prices keep rising. Real estate booms. Stock markets hit record after record. Everyone feels wealthy, at least on paper. Central banks print money to sustain the illusion. This stage lasts 20 to 40 years. And during this phase, anyone who warns of danger is dismissed as a pessimist who does not understand how strong the nation has become. Stage 3 is the silent exodus. This is the critical phase, the moment when the mathematics become undeniable. The smart money, not the public, not the politicians, but the people who read balance sheets and understand compound interest realizes what is coming. Major institutions begin quietly rotating capital out of the country. No announcements. No press releases. Just systematic calculated movement into safer jurisdictions. Foreign investors reduce their holdings. Wealthy families diversify internationally. The exodus begins slowly at first, then accelerates. This stage lasts 18 to 36 months. It is happening right now. Stage 4 is collapse. The currency loses its reserve status. Foreign central banks dump their holdings. Inflation explodes. Interest rates spike. Asset prices crash simultaneously. Banks fail. Pensions evaporate. The middle class, which holds most of its wealth in the currency and domestic assets, gets destroyed. Political chaos follows. And everyone asks the same question: how do we not see this coming? The answer is always the same. The pattern was there all along, you just were not looking. Now let me prove this pattern is real with 3 historical examples. 3 global superpowers. 3 reserve currencies. Same cycle, same outcome. The 1500s Spain. At the height of its power, Spain was the most dominant empire on earth, and it was not even close. Spanish galleons returned from the Americas loaded with gold and silver, more precious metal than had ever been seen in human history. The Spanish real was the global reserve currency. If you wanted to conduct international trade, you needed reales. Madrid was the financial center of the known world. Capital poured in from across Europe seeking opportunities in the richest empire ever created. Stage 1 was complete. King Philip II controlled half of Europe. Spanish armies were considered invincible. The Armada dominated the seas. Wealth flowed from colonies on 3 continents. And what did Spain do with this unprecedented wealth? They spent it. Wars with France, wars with England, wars with the Ottoman Empire, wars with the Dutch, a massive military presence spanning the globe. A bloated bureaucracy that consumed fortunes, royal palaces that cost kingdoms, and the Spanish Inquisition, which burned money along with heretics. By the 1550s, Spanish government spending was running at 300% of revenue, 3 times what they collected in taxes. The difference was borrowed from Italian banks, German merchants, anyone who would lend. But gold kept flowing from the New World, so no one worried. Asset prices in Spain kept rising. Everyone felt rich. The empire seemed eternal. Stage 2 was in full effect. Then something changed, quietly. In 1555, major Spanish banking families began moving assets to Genoa. The Fugger family, Spain's largest creditors, started demanding repayment in gold rather than promises. They wanted out. By 1556, wealthy merchants were transferring operations to Amsterdam, not all at once, but gradually. Opening offices, moving inventory, redirecting trade routes. Why? Because they could read financial statements. And the statements revealed that Spain was functionally bankrupt. The Spanish government was paying 40% interest on some loans. 40%. That is not strength. That is desperation bleeding through the official documents. Stage 3 had begun. In 1557, Spain defaulted on its debts for the first time. Credit markets froze. Spanish bonds became worthless overnight. The government seized private gold shipments to pay soldiers. Chaos spread through the financial system. But King Philip promised it was temporary, a one-time emergency. Everything would be fine. In 1560, Spain defaulted again. In 1575 again. In 1596 again. In 1597 again. 4 defaults in 40 years, the currency collapsed. Inflation destroyed the middle class. Spanish power evaporated. By 1600, Spain was a shadow of its former self. The golden age was over, and it never came back. Stage 4 was complete. And where did the money go? North, to the Dutch Republic. Amsterdam became the new center of global finance. Which brings us to the second example. The 1600s, Amsterdam, the richest city in the world by every conceivable measure. The Dutch East India Company was worth approximately $8.28 trillion in today's money. More than Apple, Microsoft, Amazon, and Google combined. Multiply by 2. Dutch banks financed global trade. The Amsterdam Stock Exchange was the first in history. The guilder was the world's reserve currency. If you wanted to conduct international business, you needed guilders. Period. Capital flowed into Amsterdam from Asia, Africa, the Americas, Europe. Money-seeking returns found its way to Dutch banks. The Dutch Republic in the 1600s was Silicon Valley, Wall Street, and London combined into a single square mile. Stage 1, complete. Then came the wars. Always the wars. 3 Anglo-Dutch wars between 1652 and 1674. Wars with France. Wars with Spain. The Dutch maintained military presence from Indonesia to Brazil to South Africa, and it all required money. Enormous amounts of money. Government debt increased from 4 million guilders in 1650 to 80 million by 1690, a 20-fold increase in 40 years. To pay for this, they printed currency. Does this sound familiar? Meanwhile, tulip mania hit. Tulip bulbs sold for more than houses. A single rare bulb could cost 10 times an artisan's annual income. Asset prices completely detached from economic reality. Everyone was getting rich on paper. And the Bank of Amsterdam, supposedly the safest institution in Europe, was secretly lending out depositor money to fund government wars. They were running a fractional reserve system, a Ponzi scheme dressed in the clothing of legitimacy. Stage 2, verified. By 1690, the smart money started moving. Major banking families transferred operations to London. The Sephardic Jewish merchants who had made Amsterdam wealthy began relocating. Portuguese traders opened offices in England. German financiers systematically pulled capital out over years. Why? Because the insiders knew something the public did not. The Bank of Amsterdam was insolvent. It had been since 1672. They had been using new deposits to pay old withdrawals for decades. But the secret was kept until it could not be kept anymore. Stage 3, documented. In 1795, French revolutionary armies invaded. The Dutch Republic collapsed. The guilder lost all value. The Bank of Amsterdam's fraud was exposed. Depositors lost everything. Riots erupted. Political chaos consumed the nation. The Dutch Golden Age ended just like that. 150 years of dominance gone in months. Stage 4 complete. And where did the capital go? To London. Britain was next. The cycle continued. The 1700s to 1900s, the British Empire. The sun never sets on the British flag. Everyone knows that phrase. At its peak, Britain controlled 23% of the world's population and a quarter of Earth's land mass. The pound sterling was the global reserve currency for over 200 years, longer than any currency in modern history. The City of London was the center of global finance. If you needed capital for anything, anywhere you went to London. British banks financed railroads in America, mines in Africa, plantations in Asia, infrastructure on every continent. Over 60% of international trade settled in pounds. The gold standard was built around sterling. British power seemed infinite, eternal. Stage 1, absolute. Then came the 20th century and 2 world wars. World War I cost Britain the equivalent of over $600 billion in today's money. They borrowed from America, from their own citizens, from anyone who would lend. Government debt went from 30% of GDP to 130%. Remember that number? 130%. That is the same level America is at today. Britain tried to stay on the gold standard. They failed in 1931. They briefly returned and failed again in 1933. The system was breaking. World War II made everything worse. More debt, more printing. More promises they could not keep. Britain ended the war technically victorious but financially destroyed, dependent on American loans just to survive. Stage 2, complete. By 1949, the quiet exodus began. Major British corporations started moving operations to America. Unilever, Shell, British Petroleum, not abandoning Britain, just shifting investment priorities. Redirecting capital. Building elsewhere. Wealthy British families transferred assets overseas to Switzerland, to America, to Canada, to anywhere that was not overtaxed, overregulated, declining Britain. The brain drain accelerated. Scientists, engineers, entrepreneurs, academics, all leaving for opportunities in America. Britain offered high taxes and diminishing prospects. America offered growth and possibility. The choice was obvious. By 1960, foreign investment in Britain had fallen 62% from pre-war levels. The money was leaving. The talent was leaving. The future was leaving. Stage 3, verified. In 1967, the pound was devalued 14.3% overnight. One morning you wake up and your currency is worth 14% less. The government had no choice. They had exhausted foreign currency reserves defending an indefensible exchange rate. The game was over. In 1976, Britain went to the International Monetary Fund for a bailout. A bailout. The former global superpower, the empire on which the sun never set, had to beg for emergency loans like a developing nation. The humiliation was total. The pound lost its reserve currency status. International trade shifted to the dollar. Britain's century of financial dominance ended forever. Stage 4 verified. 3 empires. 3 reserve currencies spanning 500 years. Same 4-stage pattern. Same outcome. Spain. The Dutch Republic. Britain. all followed the exact same trajectory from dominance to collapse. Now let me show you why America is in stage 3 right now. Bretton Woods, America becomes the global reserve currency. The dollar is backed by gold at $35 per ounce. Other currencies are pegged to the dollar. The system is born. America emerges from World War II as the only major industrial power with its infrastructure intact. Europe and Asia are in ruins. Capital floods into America. U.S. markets become the deepest and most liquid on Earth. Everyone wants American assets. Stocks, bonds, real estate, treasury securities. The Golden Age begins. This lasts from 1945 to 1971, 26 years of absolute dominance. Stage 1, complete. August 15, 1971. Richard Nixon ends gold convertibility. The dollar becomes pure fiat currency, backed by nothing except faith in the U.S. government. And what happens when you remove all constraints? Spending explodes. In 1980, U.S. national debt was $900 billion. Seems like a large number. Watch what happens next. By 1990, $3 trillion. By 2000, $5.6 trillion. By 2008, $10 trillion. By 2020, $27 trillion. January 2025, $36.1 trillion. December 2025, $38.4 trillion. That represents a 4,200% increase in 45 years. The debt more than doubled in just the last 5 years. But that is only government debt. Corporate debt hit $13.5 trillion. Household debt, $18 trillion. Student loans, $1.77 trillion. Credit card debt, $1.1 trillion. Auto loans, $1.6 trillion. Total U.S. debt exceeds $100 trillion. That is 370% of GDP. For context, Spain defaulted at 200% debt to GDP. The Dutch Republic collapsed at 250%. Britain lost reserve status at 130%. America is at 370% and climbing. And how does the government service this debt? They now pay over $1 trillion per year just on interest. More than defense spending, more than Medicare. Just interest, not paying down principal. Just servicing the debt. And how is that funded? They print money. The M2 money supply increased from $15.5 trillion in February 2020 to $21 trillion by April 2022. A 40% increase in 26 months. The largest monetary expansion in American history. What does that create? Inflation, asset bubbles, wealth inequality. All the classic symptoms of stage 2. The stock market hits all-time highs while real wages stagnate. Price-to-earnings ratios reach dot-com bubble levels. Housing prices have increased 73% since 2019. Everything is inflated. Every asset class simultaneously overvalued. The Federal Reserve's balance sheet exploded from $800 billion in 2008 to $9 trillion in 2022. They bought everything. Treasuries, mortgage-backed securities, corporate bonds, artificially popping up asset prices. Stage 2, complete and verified. Now here is where it becomes critical. Stage 3, the exodus. China held over $1.3 trillion in U.S. treasuries in 2013. Today, they hold approximately $760 billion. They have sold over $300 billion in the last decade. Japan, the largest foreign holder, has reduced their position by $220 billion since 2022, selling quietly month after month. Saudi Arabia is selling. Belgium has reduced holdings. Switzerland is selling. France is reducing exposure. Even the Federal Reserve itself is reducing its balance sheet through quantitative tightening, allowing bonds to mature without reinvestment, draining liquidity from the system. So who is buying U.S. debt now? Primarily the U.S. government itself. The Federal Reserve, government pension funds. Circular financing, printing money to buy your own debt. That is not a sign of strength. That is desperation. And it is not just governments. Major financial institutions are restructuring portfolios. BlackRock, the world's largest asset manager with over $10 trillion in assets under management, has reduced U.S. Treasury exposure and increased positions in emerging markets, European infrastructure, Asian real estate, gold, and commodities. J.P. Morgan has restructured institutional allocations. Goldman Sachs has reduced U.S. equity recommendations. Morgan Stanley has increased international allocation guidance. Bridgewater Associates has been warning about dollar devaluation for years and has positioned accordingly. The smart money is moving. Just like they did in Spain in the 1550s. Just like they did in Amsterdam in the 1690s. Just like they did in London in the 1940s. Stage 3 verified. Now let me tell you what happens in Stage 4, based on the pattern, based on history, based on mathematical inevitability. The dollar gradually loses reserve currency status. Not overnight, not with a dramatic announcement. Gradually, then suddenly. Countries begin settling trade in other currencies. Yuan, euros. Bilateral agreements that bypass the dollar entirely. This is already happening. China and Brazil are trading in yuan. India and Russia are settling transactions in rupees and alternative currencies. The BRICS nations, Brazil, Russia, India, China, South Africa, along with recent additions like Saudi Arabia, UAE, Egypt, and Ethiopia, now represent over 40% of global GDP. They are actively building infrastructure to conduct trade without dollars. The petrodollar system, the arrangement where oil was priced exclusively in dollars, is fracturing. Saudi Arabia has indicated willingness to accept other currencies for oil sales. When dollar demand drops significantly, what happens to all those trillions of dollars sitting in foreign central banks? They come home flooding back into the US economy. That is when inflation goes vertical, when the currency crisis becomes undeniable. The Federal Reserve will face an impossible choice. Raise interest rates dramatically to crush inflation, which makes the $38 trillion debt completely unpayable and crashes the economy immediately. Or keep printing to finance the debt, which destroys the currency through hyperinflation. Either path leads to the same destination. Asset prices crash as liquidity disappears. Stocks, bonds, real estate, everything deflates simultaneously. Banks fail. Pension funds go insolvent. Insurance companies collapse. The cascade begins. And the middle class, holding most of its wealth in dollars and dollar-denominated assets, gets completely wiped out. Savings evaporate. Retirement accounts vanish, home equity disappears. This is not speculation. This is the pattern. And it has happened every single time without exception. I know what you are thinking, but America is different. We have the strongest military in history. The most advanced technology, the best universities, the most innovative companies. This time will not be the same. Let me tell you something that history proves again and again. Spain had the most powerful military in the 1500s, the legendary tercios that conquered half of Europe. It did not stop economic collapse. The Dutch had the most advanced financial technology of the 1600s. They invented modern capitalism, stock markets, central banking, options trading. It did not stop collapse. Britain had the largest empire in history. The Industrial Revolution, a global navy unmatched in power. Trade networks spanning every continent. The sun never set on the British flag. It did not stop collapse. Military power does not prevent economic mathematics. Technology does not overcome currency debasement. Innovation does not defeat fiscal insanity. And exceptionalism is just a story empires tell themselves before they fall. But the Fed can print infinite money. They will never let the system collapse. They printed infinite money in Weimar Germany. Hyperinflation destroyed the middle class. Savings became worthless. People needed wheelbarrows of cash to buy bread. They printed in Zimbabwe $100 trillion notes that could not buy a loaf of bread. They printed in Venezuela. Inflation exceeded 1,000,000%. Doctors and engineers worked as taxi drivers just to survive. They printed in Argentina. Multiple currency resets. Decades of poverty despite enormous natural resources. Printing money does not create wealth. It transfers wealth from savers to debtors, from workers to asset holders, from the middle class to the financial elite, until confidence breaks. Then it accelerates the collapse. Every empire thinks it is different. Every reserve currency believes it is permanent. They are always wrong. The pattern does not care about narratives. It does not need your belief. It does not wait for consensus. It unfolds like clockwork, like mathematics, like gravity. And right now, every indicator is screaming stage 3. So what does this mean for you? Practically, specifically, starting today. If most of your wealth is held in dollar-denominated assets, you are exposed. Not might be, are. Diversification is no longer optional, it is survival. Consider assets that hold value during currency debasement. Gold has preserved purchasing power for 5,000 years across every civilization. Silver, commodities, Real assets that cannot be printed into existence by central banks. Consider geographic diversification. If major institutions are moving capital internationally, there may be wisdom in following not all your wealth, but some portion. Research stable foreign currencies. Swiss francs, Singapore dollars, Norwegian krone. Spreading political risk across multiple jurisdictions reduces your vulnerability to any single government's decisions. Understand the timeline. Stage 3 historically does not last forever, 18 to 36 months from beginning to end. Based on when foreign selling of U.S. Treasuries accelerated, we are likely 12 to 15 months into this phase. That means you have time, but not years. Months. Use it wisely. Increase liquidity. Keep accessible cash reserves. Yes, cash loses value to inflation. But in a crisis, liquidity provides options, the ability to buy crashed assets, the ability to move quickly when opportunities appear. Illiquid assets trap you precisely when you need flexibility most. Reduce debt. High debt loads in a rising interest rate environment are dangerous. If you are leveraged, consider deleveraging now. Every point interest rates rise makes debt more expensive to service. Invest in human capital. The one asset that survives every collapse is skills and knowledge. Abilities that create value. Expertise that solves problems. Relationships built on trust. These cannot be inflated away or confiscated by governments. And perhaps most importantly, stay informed. The people who survive these transitions are not always the wealthiest. They are the ones who see the pattern emerging, who understand the sequence, who do not wait for mainstream confirmation of what is already obvious from the data. This is not fear-mongering, this is pattern recognition. This is 500 years of economic history showing you the same cycle repeating. America's debt hit $38 trillion for a reason. Foreign central banks are selling for a reason. Major institutions are diversifying for a reason. They see the same pattern you have just learned. The same pattern that destroyed Spain, that destroyed the Dutch Republic, that destroyed Britain. We are in stage 3, the capital flight phase, the silent exodus. The smart money is leaving. The warning signs are everywhere if you know what to look for. Stage 4 is coming, the mathematics are inevitable. The debt is unpayable. The currency is debasing. The reserve status is eroding. The only question is whether you will be positioned correctly when it accelerates or whether you will be asking, like millions throughout history, how you did not see it coming when all the signs were right there in front of you. The information is here, the pattern is clear. The data is verifiable. The choice is yours. The people who survive these transitions are not always the ones with the most money. They are the ones with the best information and the willingness to act on it while there is still time. The pattern does not care if you believe in it. It does not require your faith. It does not need your acceptance. It simply unfolds, exactly as it has 3 times before. And we are watching it happen again, right now, in real time.